Welcome everybody, and thank you for joining us for today's daily market forecast for Thursday, May 25th. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. Without further ado, let's jump right into today's presentation. We've got some really exciting material to cover. First of all, a couple of disclaimers. Risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. What we mean by that, guys, is that we're not giving out specific trade recommendations. This is material that's more educational in nature. Let's look at what we'll cover today. We're going to cover the top stories among the major currencies, key support and resistance levels, emerging chart patterns and technical analysis, and finally we're going to look at some trading strategies that you can test out in your daily market activities. Let's dive right into the US dollar, the big one, the greenback, or King Dollar as it's sometimes called. The benchmark S&P 500 index posted a record close yesterday in the States, so we can see the stock indices heading higher into record territory with a record close for the S&P 500, the broad-based US stock index. The big story yesterday was the FOMC minutes. The FOMC minutes yesterday were covering the meeting from earlier this month, and the takeaway was basically that they are signaling a rate hike soon. So analysts are expecting a rate hike in June, and there's a tool that you can use to watch this, the CME FedWatch tool, and they're actually forecasting an 83% of a rate hike in June. What does this mean for the US dollar? Well, it means that they're raising interest rates, which is going to kind of underpin the US dollar because it makes it a more attractive currency to invest in because it yields a higher interest rate. It's kind of a double-edged sword, though, because higher interest rates also mean that it's more expensive for businesses to borrow money, which can have a negative effect on the stock market. But apparently, Wall Street wasn't upset by that at all, and we saw the record close in the S&P 500 yesterday. So not fazed by this forecast of a probable rate hike in June. We had some data out of the United States yesterday. Existing home sales missed expectations. And we did end up seeing the dollar index, the broad-based index of the US dollar, measured against a basket of the currencies of six of its major trading partners, ending up lower on the day yesterday. So record highs in the stock market and more down move in the dollar index. And we can take a look at a chart now. So moving over, we can see dollar index hovering around these lows. If it breaks through there, we're looking at 6-month lows going all the way back to November of last year. Moving on to the euro. We had Draghi speaking, ECB President Mario Draghi speaking in Madrid yesterday. And what happened in Madrid, basically, he defended his current policy. He's got the opposite policy, basically, of what's going on in the United States. He's keeping the interest rates low. Engaging in quantitative easing, which refers to printing money out of thin air, basically, to buy government securities and other securities in order to inject money into the economy. And in Madrid, he basically held his stance, defended his stance, and said that he sees no reason to deviate from the current policy path. So that's something that puts pressure on the euro because as is the opposite of what was going in the dollar, people don't want to invest in currencies that have low interest rates. And if you think about what's going on with quantitative easing, printing money out of thin air to buy government securities and so forth, that actually dilutes the currency and makes it less attractive as an investment. We did see some data out in the Eurozone yesterday. We saw the GfK, German consumer climate, beat expectations, giving the euro a little lift. And we saw the euro moving back towards its recent highs on Wednesday. So we're getting close to the resistance level, the nearby resistance at around 113.05. Take a quick look at the euro chart here. So we can see prices right up around the highs here. Next up, we're going to talk about the British pound, one of the other four major currencies. Pound hovering around the key 130 level. We had the tragic news coming out this week with the terrorist attack. We're going to talk about that for a second. We didn't actually see a big sell-off initially after the attack in the pound. What we did see is a sell-off in dollar yen, which is a typical response anytime there's a kind of a spike in geopolitical risk. We saw that with the emerging scandal with Trump. When the first news came out, there was a sell-off in dollar yen. So people selling dollars and buying yen, which is viewed as a safe haven, more so than the US dollar in this case. So US raised its terror threat to critical. We did see a little pressure on the British pound, nothing big. It went back down below the 130 level. And then we got a big release, UK release, GDP, gross domestic product. GDP is one of the major releases along with the employment reports, talking about non-farm payrolls, the US employment report, GDP, for whatever country you're talking about. It's a very important report. So look for volatility in the British pound around this GDP report today. So here again, we got a daily chart of the British pound. We can see we're hovering below the key 130 level. And let's see what this GDP report brings us later today. Next up, crude oil is a big story in the market. We got the OPEC meeting this Thursday in Vienna. Analysts are expecting news of further production cuts, which should provide a boost to crude oil and also to the commodity currencies. So we're expecting that the cartel, OPEC, will announce officially the 9-month extension to its crude oil production cut deal. Wednesday, we had some news coming out. The crude inventories report comes out every Wednesday. And we saw crude oil spike because of a strong crude inventory draw yesterday. Let's take a look at the crude chart. Oh, we're going to take a quick mention of Canadian dollar pushing higher ahead of OPEC. So we see dollar CAD moving lower, Canadian dollar moving higher. And here we got NYMEX crude oil futures, and we can see that crude's moved above this big $50 level and holding it around $51 currently. Okay, let's jump over to the charts. Time for the charts and some technical analysis. Got a lot of charts for you today. I've got to scroll over. Start with the biggies. We're going to take a look at the euro on the daily chart. We can see here we are. We're above this major downtrend line. We're approaching this major horizontal resistance level that I mentioned at about 113.05. So the big picture on the daily chart is that we're very much in bull territory. Traders on the daily time frame therefore might be favoring trades on the long side or buy trades rather than sell trades. You might say. We can see price consolidating a little bit up here and maybe taking a breather before trying to breach this major resistance level here. To the downside, we've got a trend line here, which was resistance. Formerly resistance, the trend line can become support to the downside. So if we see price retreat down here, we might expect to see a bounce here. 200 period SMA, simple moving average. It's viewed as the line in the sand by technical analysts. And daily time frame is a very important time frame everyone's looking at. So if price can come back down here, we might expect a bounce at this 200 period SMA. Trend line support to the downside again. And the RSI momentum oscillator is hovering around the 70 level. If it gets above 70, it signals overbought conditions. As of right now, it's sort of flattening out and not telling us very much. Moving on to the dollar CAD, we talked about the OPEC meeting and its impact on the Canadian dollar. We can see the dollar is getting sold, and the Canadian dollar getting bought ahead of this OPEC meeting. We can see this 200 period simple moving average likely to come into play as a major support level. And we have a nice trend line to the downside here, providing further support to the downside. RSI momentum going lower. Under 30 indicates going into oversold conditions, but it's not there yet. Jumping over to the British pound. As we talked about earlier, we're hovering right around this key level of 130. Price pushback below there in the last couple of days. A traumatic time in the UK after the tragic attacks in Manchester. But like I said, it didn't have a huge effect on the British pound. We can see it didn't really sell off very much. Major technical indicator here is we have this golden cross, 50-period simple moving average crossing above the 200. It's a very bullish indicator on the daily time frame. That's what we're looking at right now. And we're going to jump over here again. I showed you guys this yesterday, but as potential target for the upside, if price can rally through this 130 level. It's good to pull out the old Fibonacci tool, the Fibonacci retracement tool. And here we can see that this major 50 level is going to provide a good potential target for the longs if price can break through that 130 level. We're looking at 132.41 as a major resistance level there. We can see that this 38% level here is coming to play as a major support level. So I'd be looking for support, potential support down at 128.26 in the British pound. Next up, let's look at one of the currency crosses. We got a really nice technical setup here in the euro against the New Zealand dollar. We call them currency crosses when they don't have the US dollar. So neither of the pairs of the US dollar. It's the euro against the New Zealand dollar. And what we got in the case of this pair is a nice up channel, well-defined up channel. This upper trend line has been tested several times. We've got a nice lower trend line here. We can see that the 200-period simple moving average looks like it's coming to play here as a support level. And so what we're looking for on this chart is potential breakouts to the upside here, or potential resistance. You might try to fade the breakout and potentially sell at this level to catch a bounce off it. But if it does break through here, I would potentially expect follow through to the upside. When I say follow through, I mean a nice fluid movement to the upside. Conversely, the same thing down here. A shorter term trader might try to catch a bounce off of this line. And then if price does break through, you might see good follow through to the downside, a nice fluid move to the downside. And then I'd be looking for potential support at this 200-period moving average, which looks like it's come into play multiple times in these last couple of months. Moving on, let's look at the metals quickly. I'm going to take a quick look at gold. We've been watching this the last few days. Again, we got a nice up channel here. We got this pattern, the opposite of the golden cross, which is what we saw in the pound. We got the death cross, which is when instead of the 50 moving above the 200, we got the 50 moving below the 200. Call that the death cross, and we can see there was a really nice down move off of that bearish signal from that moving average crossover. Again, we can see the moving averages come together here. When the moving averages come together, it signals a potential change in trend. So here we've got a potential golden cross forming in gold, and we got these two. We got this nice channel here with a nice, well-defined upper trend line, a nice, well-defined lower trend line. So we'll be looking for those characteristics, a potential bounce at resistance here, and if it can break through here, nice follow through to the upside, potential bounce to the downside, and if it can follow through, if it can break through, potential nice follow through to the downside. Next up, we're going to jump over. We got to some of the other nice technical charts that I pulled up. Another currency cross. We got the Aussie against the New Zealand dollar. Again, it's the daily chart. We got a nice channel here. We can see price coming down, potentially testing this lower trend line. And this is the 200 in yellow. This is the 200-period simple moving average. What we had right here is confluence. So if price had come down here and this trend line was here, and the 200-period simple moving average was also in the same spot as it is here, that's when you have something called confluence. So we got two different indicators of support together. So you got, it's like twice the power. So if you were looking for support at that level, you'd be looking for even more support with both of these, both the trend line and the simple moving average there. So with price coming down here, if we have the trend line and the moving average in the same place, we'd be expecting even more support and even more potential for a bounce. And if price can get through there, we'd be expecting even more follow through to the downside. Let's take a look at crude. Ahead of this OPEC meeting, we're going to see some volatility here, I imagine. We're looking at the daily chart again. We're actually in kind of a wedge pattern here. We got a nice downtrend to the upside, nice downtrend line to the upside, I should say. Trend line here to the downside, and the 200 period SMA here. Let's wait and see how OPEC shakes up the market today. Wanted to pull up a shorter term chart for you shorter term traders out there. I know there's a lot of day traders with OctaFX. So I'm pulling up an hourly New Zealand, and it's another cross, an hourly New Zealand dollar against the Japanese dollar. We had a nice up channel here. I found this pattern using a tool called AutoChartist. And so here again, if you want to test these channels, triangles, these patterns that I'm talking about a lot using trend lines, if you look at them on the hourly chart, it's more likely that you're going to see something happen in terms of price going up or down and bouncing off it or breaking through it. So it's a good way to test it, to look at what's going on the lower time frames. But we can see that price is contained within this channel here, and we have nice potential for a breakout to the downside or the upside here, and look for potential follow through if it is indeed able to break through there. Another way you could trade it would be to look for a bounce to the upside here. If price comes up here, could potentially bounce off there, or to the downside you might see it bounce. So for example here with this candle, price opened here, came down here and tested the trend line, bounced back up, and now it's actually trading higher than where it opened, which is why the candle is green. Candle is red when the price opens at one price and closes at a lower price. Next up, guys, I wanted to take a quick look at a trading system. I like to bring in these, try and introduce some concepts that you can test in your trading, and just kind of get some of the ideas, that the concepts that are used in trading system into your sort of daily trading activity. I think it could help move you towards greater success. So we're looking at, this is a very basic trading system. It's called the KISS system, as in keep it simple. Uses 3 time frames: 15-minute chart, the hourly chart, and the 4-hour chart. So I got the hourly and the 4-hour here. Just going to shrink this up a little bit, because I'd written some stuff on the screen here. That's better. Okay, so it's called the KISS system, keep it simple. We're using the 200 period exponential moving average. Don't get frightened off by this terminology, simple moving average, exponential moving average. It's not that complicated, guys. An exponential moving average is just a moving average that puts greater weight on the more recent periods, and the results are pretty similar, but day traders often prefer to use the exponential moving average. So we're using the 200 EMA, multiple time frames, the 4-hour, the 1-hour, and the 15-minute. We're looking for the entry signal on the shortest time frame, which is the 15-minute. So for a buy setup, you're looking for price to be above the 200. Here we got the 200 period EMA on the 4-hour and the 1-hour. And what you're looking for is for price to move above the 200 EMA, I should say 200, not 20, on the 15-minute chart. And then the sell is the inverse. So let's look and see what's going on the 4-hour and the 1-hour. So we got price above the 200 period EMA on the 4-hour. We got it. It's just coming up above the 200 EMA on the 1-hour. And let's see what's going on the 15-minute. Okay, so let's imagine we got it above the 200 EMA on the 4-hour. It's coming up above, it's almost above it here. So let's just imagine that, for the sake of this example, that it's above it. What we would want to see for a buy signal would be for price to move from below to above the 200 EMA on the 15-minute chart, the shortest time frame. And conversely, for a sell signal, you'd be looking for price to be below the moving average on the 4-hour. You'd be looking for it to be below the moving average on the 1-hour. And for your entry signal, you'd be looking for, you'd enter the trade basically when price moves from above to below on the 15-minute chart. So I think it's a useful system to just play around with, test it in a demo account if you're interested, and it gets you kind of into the mindset of understanding how useful it is to use multiple time frames and to try and kind of your odds of success are going to be higher if you're conscious of what the trends are on the different time frames, and if you're trading kind of in line with the trends on different time frames. So if you have an uptrend on 3 different time frames, you're going to be more likely to be successful entering into long trades or buy trades, basically, and the inverse if on multiple time frames you're in a downtrend. So it's a useful concept to work with. But looks like we're running out of time, guys. I want to thank you all very much for joining us today. I look forward to speaking with you again in the future. And don't forget to tune in later. Thanks for joining us.